Hi, everybody. It's great to be here with you again. Today, we have something special. We have one of our long term investors, Brian Peterson, who is a CPA and has also bought 7 homes with ICG in 3 states. And we thought it would be useful and interesting to hear Brian tell us about his experiences. And as a CPA, obviously, he can shed some other light. So that's interesting. Brian, welcome.
Good afternoon, Adiel. Great to be with you. Thank you.
So, Brian, let me ask you just a couple of questions, if you don't mind. How many homes did you buy with us?
So I bought 7 homes total, 6 of them with you.
In the 6 homes that you bought with us, what states were they in?
Yeah, so I'm in both Oklahoma and Florida. And so I have 4 homes in the Oklahoma City metro area. I like Joe Pryor. And then I also have a home in Jacksonville and one in Ocala.
And when did you start investing?
So I bought my first property, single family home, back in late 2016. That was in Oklahoma City from Joe Pryor. And just by way of some background, Adiel, I was first introduced to ICG by a friend who had been telling me all about you and ICG for a few years. And, I was working a zillion hours at the time, a victim of my own routine. And so I was like, yeah, I'll think about it. And, eventually I started attending your quarterly expos, which were in person back then. And, as a CPA who understands the time value of money, as a finance guy, the key concepts really clicked for me early on. And so, for me, at first the logic seems kind of counterintuitive, where you hear words like debt, inflation, time, all bad words in everyday life. But, when you view it through the lens of what you always talk about, the 30-year fixed rate loan, it's very logical. And so debt, inflation, time, they become these forces of good for real estate and become our best friends.
Yeah, because it's very normal for most Americans not to realize that they have something so special. But when people from other countries say, what? You have a loan that never changes with inflation for 30 years? Are you crazy? Everything goes up all the time, but your loan stays the same? That means time and inflation are now your best friends. The fixed rate loan with inflation and time, so you don't have to wait for 30 years. In fact, I find the 30-year name is almost misleading. I wish it would be called by a regular name like Johnny. That would be a better name, because typically between 12 and 14 years, people discover because the loan never changes, but everything else does, because there is inflation and the dollar is weaker all the time. You need more and more dollars. Now, after 12 to 14 years, your loans are very small. And many people even sell, like if you bought 6 homes, they sell maybe 1 or 2, pay taxes, and pay off the remaining 4 or 5 loans. Now they have free and clear homes, 5 of them, let's say. And if somebody says, well, that's not enough, it's okay, buy 10, 20, 60, 164. Those are just building blocks. But tell us what you started relatively recently in 2016.
Yeah.
What years did you do most of your buying during?
Yeah. So, it was a very gradual process for me. And at first, the concept of potentially having 4, 5, 6, 7 homes, it sounded ridiculous, right? It just seemed unattainable, unrealistic. But, so I started in 2016, 8 years later, I just did it very gradually, where I would do maybe 1 home a year. There was a year where I didn't, a year where I did 2. And really, it's, that first is like, once I got through that first home, going through the whole process the first time, I knew it's like you learn the drill, and then home number 2, and especially home number 3, it becomes a lot less scary, right? It's a very, the process. It's very straightforward.
Yeah, so that's basically how I like to talk to new people. Some people come to me and they say, I just sold a company, I want to buy 100 homes. And I sometimes say, how about you buy 1? Because all those doubts and fears, I'm buying out of state, what's going to happen? You buy 1 home, the local manager rents it out for you. Now it gets to be stable and even boring. Buying home number 2 is merely a repetition of the same process. Buying home number 5 is downright boring relatively, because it's really the same every single time. So
Exactly.
since you started in 2016, which is only 8 years ago, and you've been buying them very gradually, it means the last 2 or 3 you just bought really recently, like maybe in the last 2 or 3 years. So you haven't had a chance yet to experience that 12 to 14 years from the minute you buy and you say, oh, look at my tiny loan. And now you have all this equity. And you talked about something that I really liked that you mentioned. You said, I never thought I would own 7 homes, 6 homes. The problem is, where do you live, Brian?
I live in the city, in San Francisco.
San Francisco. So when you live in San Francisco, where to buy a decent home, you're probably going to have to shell out at least $1.7 million, if not $2 or $2.5 million. Your brain is wired to home is equal to 2 million. So from that vantage point, saying, oh my God, how am I going to own 7 homes? But then, of course, you bought homes in Oklahoma City. Maybe when you started, there were only 200,000, maybe even a little bit less. So, to buy 6 homes like this, even if they were all 250,000, that's $1.5 million. That's not even one home in San Francisco. So once you get over that barrier, you see that it's not the word home, it's the dollar amount. How much real estate did you buy? So, Brian,
Right.
can you give some, perspective as a CPA?
Sure. Well, let me first just, I'll also just give you, I wrote down some numbers here just in terms of, what my first home has done. Because I've started to see a lot of the benefits that you talk about. So the purchase price of my first home was $165,000. Okay. I put down the bare minimum, 15%. So that was $25,000. So $140,000 loan. The loan balance is now about $118,000, $119,000, which my tenants are paying down for me. Right. And so the home value, I'd say, is right around $270,000. So the loan balance, is about 44% of the fair value. So in 5 years from now, I'm projecting that to be less than 30%. So I've already made some great progress there. And so it's exciting. And so just kind of looking at it from also just a rate of return perspective, I've only invested $25,000 of my actual money. So with closing costs, you could call that $35,000. And with that, I've taken a $165,000 asset that's now worth $270,000. And it's really a lot more than a $100,000 gain because, again, my tenant is paying down the principal, about $20,000 so far. And so and then at this point, I already see pretty good monthly cash flow. Right now it's about $500 a month. So $6,000 per year. So, you think, so we're basically starting with $35,000 and basically quadrupling that over 8 years. Now talking about from a CPA perspective, the icing on the cake with this, I'm not paying any federal or state income tax on that $6,000. Not one dime, not 1 cent, because the tax law, people always, there's a lot of colorful 4-letter words people use to describe taxes, and usually fair is not one of them, right? And so,
well, that's a 4-letter word, fair.
Yeah, it's a fair, but it is fair for real estate.
It's an F word too. Yeah,
right. It's an F word, and so it's like even though I'm generating positive cash flow in everyday life, right? My rental income less all my expenses out the door, about $500 a month for that one property. I'm showing 0 in taxable income because of paper losses. A big one, which is we get to take that value of the home and depreciate it over, we separate it from the land, we depreciate it over 27 and a half years. So expenses like depreciation are a huge expense. And so that's a really powerful, and so for all my properties, by the way, I started investing in 2016. I've not paid any federal state income tax at this point. And so that's a powerful message, especially for like here in the Bay Area, where a lot of families are commonly paying 32% plus in federal. You throw in another 9% in state taxes, right? Plus you have Medicare, Social Security. That's almost half your income going to taxes. And so if you can have, if you're a real estate investor and it takes time to, maybe sometimes you start with negative cash flow, but eventually inflation works all that out. You get to the point where you have this extra income stream where you're not paying any taxes on it. That's powerful. That's a powerful message to share.
And by the way, you mentioned the depreciation loss, where you take the cost of the home, you take the land portion out of it, which is not much usually, and the structure can be depreciated over 27 and a half years. That's the tax code in a straight line. Now, as if it was a machine, that goes down in value where, in effect, the house that you talk about has already gone up in value from 165 to 270 and will likely keep on going up because of inflation. So, by the way, that's another miracle we have in the US. It's not a given. Many countries in the world, when I tell them about depreciation on a house, they go, what? We don't have that. So it's a phantom loss. It's a non-existing loss on a gain, really. So it's almost too good to be true how the US treats houses, rental houses.
Absolutely. And the great thing about that is for all my homes, I'm in a situation where my paper losses exceed my income coming in, and I get to carry forward those losses year after year. So let's say the time comes when I decide to sell on those homes, I have those losses to offset that gain. So, so it's a situation where either I am not paying taxes or kicking the can down the road. It's a really good thing.
Yeah. And by the way, so one miracle that's indescribable and most people are not aware of it, which is one of the main reasons why I'm not retired, because I want to bring the message, hey, 30-year loan, never changes, everything else does. Are you crazy? Okay, and by the way, the rate is not important. So you got some of your homes with the lowest rates in history, some of them with higher rates, who cares? When the rates go down, you refinance.
Yes, and I've done that. For a few homes, I've been able to take that 5 or 6% and refinance it, get a 4% rate, and then there's no money out the door for me because I just take those closing costs and just add it into the loan. And so I can realize the benefits right away. When
I began investing, my first 24 homes were financed with loans at 14%. 14. I put the minimum down, which back then was only 10% down with PMI. And of course, everything started negative. Who cared? As long as I could sustain the negative, which I was because I was working in Silicon Valley and getting paid well. When the rates went down to 12, refinanced to 12. When they went down to single digit, that was an amazing day. I refinanced to 9.95. I got positive and more positive. Doesn't matter what they are on the day that you buy. By the way, there are a few more miracles. So the miracle of the 30-year fixed rate loan in the United States, the miracle of depreciation on a house that actually goes up in value. And then the miracle of the step-up basis. You want to talk about that?
Well, ultimately, if I go and hopefully I'll be around for a long time, but when I do eventually pass on many decades in the future, and let's say I don't have any kids, but I have a niece, let's say my niece inherits my properties, her basis isn't my basis. Her basis is the fair value of the properties on the day that I pass.
Unbelievable.
It's almost unbelievable, isn't it?
Unbelievable. So if you want to sell the home one day before you pass, well, you will pay quite a bit because by the time you pass, it may be decades and decades away. The basis could be zero and the property could be worth a lot. You will pay a lot of tax. On the day that you or I or whoever, we all pass at some point, the basis steps up to the fair market value of the home. The next day, your niece wants to sell the home, she pays the fair market value of the home minus the new basis, which is the same, zero.
Zero.
The treatment of rental homes in the United States is so outstanding. It's when I talk about it, I feel it's almost too good to be true.
Absolutely. Yeah, that's the question sometimes becomes, why isn't everybody doing this, right?
Exactly. That's why I'm not retired. And by the way, regarding the step-up basis, one thing I sometimes like to say in jest is one very good tax strategy, not that I want to recommend it, is to die.
Is to die. Yeah, you could have a $3 million. So you have, 7 homes, they're worth $3 million. Whoever inherits that, they have this $3 million asset that they can either choose to keep them or they can sell them and realize that money and not pay any taxes.
So Brian, my suspicion is that if you and I talk, let's say 7 years down the road from today, you'll be telling me about all these homes with tiny loans and maybe you just got rid of them already because they were so small. Now you have 7 or 6 or whatever the number is, or maybe more, maybe 10 free and clear homes or close to free and clear homes. there's going to be one sentence you're very likely to be saying, which everybody seems to
I
say.
wish I would have bought more. I wish I would have bought more. And especially, let me tell you, especially with the pre-pandemic, those years with those Goldilocks rates and those lower home prices. Boy, yeah, I wish I would have bought a few more during those years.
Yeah, but the 30-year fixed rate loan in the face of inflation and time is so dominant that it almost doesn't matter if it was the Goldilocks period or if it was the pandemic period, or if it was even people who bought at the height of the boom in 2006 before it really bottomed out in 2008. Now they're looking at it, I should have bought more. Even at the height of the boom, at the highest prices, the 30-year fixed rate loan is so dominant that it still worked out very well.
Yeah, over the long term, yeah, and the value of the homes always outpaces. That's the history. It outpaces inflation.
Well, Brian, it's very nice to see you, again, and to hear your experience. Of course, being a CPA makes it a little more. You have a certain more, in-depth view, and I think we are gonna bring you up to talk at one of our events in the future. It's gonna be fun. Very nice for you to take your time to come and talk to us about that. It's always more exciting when I hear it again because it kind of triggers everything. Thanks a lot.
Absolutely. Yeah, thank you. And I want to continue to spread the message as well.
All right. See you soon.
All right. See you soon, Adiel. Thanks for having me.
Thanks for joining me today. Click the subscribe button for more video on real estate. Got a question or comment? I love questions and comments. Leave yours below.